folks. This live stream is brought to you by my sponsor AAA FX. Now, they're a fully regulated broker in Europe and South Africa offering Forex indices, commodities, crypto, and over 100 stocks. Now, at AAA FX, you pay no commission on any Forex pair using their ECN Plus account and low commissions on cryptos and stocks. Plus, you can deposit with cash or crypto, get a free VPS with deposits over 5K, and easily integrate the well-known copy trade service Zulu Trade. While you're waiting for the stream to start, go and check them out by clicking the link in the description, comments, or visit AAAFX.com.
What's going on, everyone? Hopefully you guys are doing well. Happy Saturday. What is going on, guys? Hopefully you guys are doing wonderful. Let's see, where are you guys from? Drop your location, drop your any pairs you guys are looking at to start the week. We do have quite a bit to go over today. You guys know I'm always ready. Got my coffee. All right. Let's see. We have actually don't have as many pairs to go over as last week, or well, 2 weeks ago because we didn't have one last week. But we have, I think, 14 pairs here on my list, so still a good amount. We're gonna do 7 to start, and then we're going to take some questions. Go over anything that you guys think that you might be struggling with in your own trading. And then we're going to go over the rest of the pairs. All right. New Orleans, Bulgaria. Good to have you guys on today. AD USD. Let me see. I think that it's not a pair that I have, but I might go over it later. Nigeria. Is it necessary to use Forex Factory? Not necessarily. I have it on my screen just to kind of keep up with when news events will come out. But at the end of the day, you know, we don't trade news. No one should trade news. You know, news is obviously just used as the excuse to push price in the overall direction it was always meant to go, or do the exact same thing it was always going to do anyways. It just creates the volatility in the market. So it's not imperative that you keep up with it. However, if you are wondering why there might be a big spike on the US dollar at 8:30 in the morning EST, it's probably why there might be some news event going around, but no, not imperative. South Africa, what's going on? Tanzania. Man, I can't pronounce things today. All right. USD Swiss franc, USD CAD. Yep, we're going to be going over those. Let's see. This will actually be the last live session, guys. This will be the last one for a little while. Going to be taking a break. Going to actually be coming out with some really good value YouTube videos for you all. We'll be doing that over the next month or so. Long time no hear you say about monkey. You'd have to. Everyone who's new, you probably wouldn't understand that joke. When I reference retail traders, I call them all a bunch of names. Is GJ a good pair in your opinion? Probably not a good. If you're relatively new to smart money, probably not. I would stick to the majors. You know, EU, GU, NU, UCAD, AU, USJPY maybe. Yen pairs can be quite erratic, especially if you're new and don't really understand exactly how those types of pairs move. But I mean, if you like it, by all means. Let's see. We are actually shooting for, guys, I am so sorry. We are shooting for the end of February. We had to push back the course release. So we were going to be coming out with that course on the 14th. So 2 Tuesdays from now. However, production or, everything that goes into it just is delayed a little bit, and we have to push it back just a tad. So Definitely this month, 100%. I can give you that guarantee, but I don't think it will be the 14th. It'll probably be, maybe the week of the 20th, or maybe the last day, couple last days of the month. So we'll see. Alrighty. We'll get started here in just about 2-3 more minutes. Just going to wait for people to trickle on in here, and then we will get going. All right. We got LA. What else we got? Where else are you guys from? Don't be shy. Does Wyckoff Wizard EA work on MT4? The Wyckoff Wizard EA does not work on MT4. However, if you guys are familiar with copy traders, they work perfectly. I use copy traders a lot in my personal trading, and that's something that our developer could set up for you easily. So, in all reality, it's not a big deal, but no, it does not specifically work right on MT4. While you are off from lives, will you be updating charts in Discord? Well, I'm going to be continuing to post charts in my VIP community, of course. I try to stay away from the free community as much as possible. I do send some stuff here and there, but obviously, the more that I send in the free channel, the more of a handout it becomes, and the more dependent free members become. And it's not just because they're free members, it's because, when people are looking for easy cop-outs and easy ways to make money, then it's just not the right mindset to have in the world of investing or the world of trading or anything. So the difference between the EAs and the site. So guys, I know probably a lot of you guys are asking questions about the EAs. I know I've been posting some on my social media about this new EA, but that EA that I've been posting, we're not selling. We're not going to be selling that. It's way too valuable. Probably won't be doing that. However, we're going to figure out a way for you guys to utilize it in some capacity, but we are definitely not selling that EA. The difference between the EAs on our site, those are able to be sold, not because they're not as good as the other one, just because of the legalities of it. It's hard to explain, but the EAs on the site have different entry strategies based upon the different facets of smart money concepts. So it diversifies the risk in its entirety. So if you have one algorithm trading 1% risk, right, and it makes you 1%, well, great. Then how about you trade 5 algorithms that use 0.2% risk that make you a cumulative 1%. So it's diversifying the risk, but it's keeping up with the same return. That's what I do in my personal trading. I don't just trade. I use algorithms. I invest in real estate. I invest in a lot of other things. Very small. I mean, obviously not on a big scale, but I do a little with real estate in terms of my other friends who do that. I give them some money and invest in that, but nothing on a big scale yet. What I would recommend, guys, is if you are interested in just different passive streams of income, definitely algorithms for trading are definitely good. Obviously, we're not meant to do 10, 20, 30% a month. It's really just meant to do 1, 2, 3, 4, maybe 5% a month if you're lucky, because you have to be able to sustain that sort of return. In order to hit 10, 20% a month, you have to assume risk that is just unbelievably high, that it ends up just being a ticking time bomb for your account, because you can make a lot of money with it, but at some point it's just going to blow. So you have to take a long-term approach to it. And I would recommend that. I would recommend, investing in just, if you guys are in the States, investing in the S&P. That's a really easy way to invest. Obviously, if you're not in the States, you can still invest in the S&P, but different stock portfolios, different index portfolios, and just hold for the long term, and then do all your trading, which is short term, on the side, right? Because at least you have some other, you put money away for investing in the long term, which is going to set you up very nicely. Good morning, Jalen. Good morning. All right, we're going to go ahead and get started here, guys. I'll take some questions here later, and then we'll finish up with the rest of the pair. So I'm going to go over half of them. So I'm going to go over 7 of them, and then we'll take some questions and then finish up. So I don't foresee this being the 2-hour-long live session that we normally have, maybe about an hour, hour and a half. So stay tuned for the whole thing. I'm going to be showing you guys exactly where I'm looking to get in this week. All right, let's do it. Let's see. I know some people keep asking, why do you got brown lips? because I drink too much coffee. Gotta love the coffee. All right, can you guys see this? Can you guys hear me all right? I just want to make sure I'm not talking to a wall when we get started. Just drop a yes in the chat. And we'll go ahead. All right, perfect. Awesome. All right, so that's that. Let me just, let's go over here. Okay, so if anyone cannot see me, hear me, see my screen, anything, just send me a message on Telegram. I'll have my phone right here just in case, because I can't see the chat as I'm going through this. Just want to make sure you guys are good. So anyways, so US dollar, obviously we had this huge push up this past week, right? We've taken a lot of liquidity from the beginning of January. So I think that's probably what's going to occur. We're going to continue to push higher, at least into 12,880, potentially into 12,930. If we scale into the 1 hour time frame, you will notice that, I know it's a little bit blurry. I'm just zoomed out here, guys. But anyways, we have an area of supply, right? We had a lower low, we had a lower high, we had a lower low, okay? All of this is just one overall pullback. And I know it's kind of confusing in a sense, but we have to just ask ourselves the question, what is the previous high that made the previous low, right? So this is a low, right? When did price break this previous low? It broke it right here. So where was the high that created it? Right here, right? So what was the high that created this low here? Right there. And obviously we can see that that high did not take out that high. So, hence this is just one pullback, right? So that's how we can determine market structure, right? It's not that this is a high, this is a low, and this is a higher high. We should be looking for pullbacks to long, right? This is the low that generated that high. So until we break that high, we are still bearish. That's exactly what happened. We generated liquidity. You can see 1, 2, 3 touches of this trend line. If I just even pull it down a little bit for that third touch, retail is probably just, that's exactly what they're doing. And then price creates a new high. And obviously we can see that we've had equal lows here, relatively equal lows here. So I just draw a trend line here. I'm guessing this is what retail was drawing as well. So almost like a channel, right? So we took buy side and now we're taking sell side. All right. So we are looking for continuations down overall, right? Because higher time frame, we are still very much bearish. If I go to the higher time frame, we will see that yes, we had that previous 2-day close very much bullish. However, this is probably just profit taking, because as I zoom in here, you'll see just the amount of liquidity that was being built up in this region of price. So we actually have this low here that has yet to been taken out. And we are looking to roll over to the downside here. Okay, so continuation down overall. Now, I'm not saying that we should just be selling dollar to start the week. I'm saying that we probably should be looking for overall shorts, but understanding that since we are in this pullback phase, we may see a little bit of a push up on the dollar to start the week. Who knows? So definitely overall bullish on XXX/USD, so bearish on dollar. So that's what we need to be looking for our higher time frame setups. However, for a lower time frame, we may see continuations bullish on the dollar to start the week, maybe into the latter half of the week. So we'll just see. So what we will be talking about, especially in this new course that we're coming out with, is the difference between inside and outside supply and demand zones, because they are different. Normally when you are creating let's just say a demand to supply flip, those of you who have been taking my courses, or even if you guys have just had surface level understanding through my YouTube videos, you would understand that essentially in its basic terms, a supply to demand flip in this sense is when demand right in here fails because we don't create a higher high as a result, right? This demand is validated because we came into it and created a higher high. But this new demand that it created here did not make a higher high. We actually made a lower low. So that will flip to supply. Now it's different because many times what you'll see is you'll see price pull back and it'll go like this and it'll go like that. So this is what's called an inside supply zone. Inside, right? Inside the range. Outside, or excuse me, sorry. Reverse that. This is outside. This is inside, okay? Because this is the range here. This is outside of it. This is inside of it, okay? So outside supply, this is inside supply, right? Because we just essentially blitzed right through that level. We didn't even react off of that level. And in fact, we created a lot of imbalance, just straight selling volume. There was no buying that was offered within that region of price there. So this inside supply is a possibility for price to come into and reverse, right? To continue down, right? Because higher time frame, right, guys? obviously the markets are fractal. And what do we mean by that? We mean that, the lower time frame is the same as the higher time frame, right? So lower low, lower high, lower low, lower high, low, high, low, high, low, right? And then the same thing occurs higher time frame. Lower low, lower high, lower low, lower high, lower low, lower high. It's just the sequence of your perspective, right? So in your perspective, you'll look at the higher time frame being this, or the lower time frame being this. Then we may reverse, but it's really just an overall pullback because we still are higher time frame bearish in this sense. So it's just the way that you view it. So let me go down to the 1 hour time frame. This is why I'm really liking US dollar shorts from these levels. Now, if we break and close above this high, then we may be in for an overall pullback. What I mean by overall pullback, probably we just have to zoom out to the daily, maybe an overall pullback, maybe up into this region of price here, right? That imbalance, and then this last point of supply. So we may get that overall pullback before continuations. I do think dollar is going to continue short. However, interest rates keep rising. And what does that mean for the domestic currency? It means strength. So I think that we were pricing in, meaning preparing for that interest rate hike with this huge push to the upside that lasted, you can even just see since 2021, right? We've been pricing that in. So we'll just have to pay close attention to what the US dollar wants to do. Because overall, yes, you can definitely say we are bullish, 100% higher time frame. But as of right now, we have equal lows. We have a lot of low resistance that we probably need to fill up. So continuation short are what we should expect until proven otherwise. So with that being said, let's go into the rest of the pairs with that sort of bias. So let's first talk about AUD-JPY. Now, I am currently in AUD-JPY from 2 levels, and I think it really can continue lower. Now, what you guys will probably have noticed over the past few weeks is very strange and erratic price action. You can see that we have created a high, pushed all the way back down, pushed all the way back up, swept buy side liquidity, came down, swept sell side liquidity, came all the way back up, swept buy side liquidity, and now we're pushing back down again. It's just really erratic price action, and it makes it very difficult to trade, for one. However, if we have a higher time frame perspective, we'll understand that all of this, taking liquidity on either side of the market is all just noise within the higher time frame because we are overall bearish. So another one of the things that we're going to be talking about in this final course that we're coming out with soon is the importance of overall objective, right? Where is the market going? Because if you don't know where the market's going, that just decreases your probability of your current trade by a lot, right? Because if you're going, let's say you're going to be entering into a short. If you have all the confluences for a short, how do you know it's still going to go short? Where is price going? Because if price doesn't have to go anywhere, if price doesn't have to go short, then it's not going to. The only way that price is going to go short is if it needs to push into something, right? Because we know these institutions and banks run the market. They're the ones manipulating price. They're the ones constantly hedging in and out of positions. They do the same thing lower time frame as they do higher time frame. So for instance, they may have some liquidity that they have to take in here, but at the same time, they have to mitigate orders from, prior to 2021, December, November time, right? So they're constantly hedging their positions. So it's looking like we may go and attack, big capital liquidity meaning higher time frame areas of interest, right? So this is daily, weekly levels. So all this is just lower time frame sell side liquidity, right? So we still are currently in this lower time frame or kind of lower time frame downtrend. And I fully expect price to continue lower until at least 863. If we look at the weekly time frame, we actually have come up into a level of imbalance. And this is just top-down analysis, guys. I'm going to quickly go over this just because this is the type of stuff that you need to be looking for. So obviously, we need to be looking for where is trend. And it's not very clear because, it's not making clear higher highs or lower lows or lower highs or higher highs, higher lows, right? We're sort of in consolidation. However, we can just see the areas of supply that we have been reacting off of. There is a wick right in here. You probably can't see it just because I'm zoomed out a lot, but that took that previous high, created a lower time frame, perfect area of supply here in which we came up into beautifully, sweeping all this buy side liquidity. In that process, how do we understand what valid supply and demand levels are, guys? I've been getting this question a lot. How do we determine which ones are valid, which ones are not? And the answer is not that simple. However, to make it as simple as possible, we need to look at the counter trend. right? So this is the low that made that high. That high made this low. Obviously, you can see many higher highs and higher lows. If you scale into the daily, it's probably a better trend. But essentially, this is the last high, right? We created a low and we failed to make a higher high. And then we made a lower low. And that's where we started the downtrend, right? So that will turn into that demand to supply flip. And that's exactly why we came into that region. So if you just start practicing that and stop placing your trades based upon the 61.8 fib or the trend line or any of that nonsense that doesn't really work or doesn't make any sense in the whole point of smart money, start looking at the previous or the last points of selling or buying volume that flipped the structure. That will probably help your trading a little bit, just from a basic standpoint. So from a daily time frame perspective, we came into that level of supply, and you can clearly see where price flipped and made the lower low. So that's our last point of supply here. We start trickling back up and again creating sell side liquidity. Retail is probably buying at this trend line. So we already know there's sell side liquidity resting below this low. So that, that trade there, that if you would have taken it at that time, which was back in November of 2014. I was not trading at that time, but anyways, that would have been an interesting opportunity. And you can just see the consistency within how the markets move. But this is back in 2014. This is 9 years ago, right? So 9 years ago, price action is the same as it is today. Nothing's going to change. Obviously, the markets will adapt and they will change in the slightest, but the overall concepts of how buyers and sellers interact with each other in a market is always going to remain the same. So there's always going to be manipulation. There's always going to be forms of supply and demand. There's always going to be, interactions of that nature to propel price in a specific direction. It may look different over the years in a sense, but the concepts will always remain the same. That's why smart money in all reality is not a strategy per se. It's really just the understanding of the underlying nature of the markets. So that's why, it'll always be around. It may look different over the years, but liquidity is liquidity at the end of the day, right? It's going to be the same. So we have, again, this inside supply right in here, right? It's not right there. It's not the outside supply. If it was an outside supply, I would have done like something like this. It would have failed to have made the higher high, made the lower low, and that's what the supply would have been. But instead, it's actually out here because we just blitzed right through it. Yes, we pulled back into that level very briefly, but what did that leave? That left a huge imbalance for price to come and fill. So that's, higher time frame. So of course that took from 2014 all the way to 2022, so 8 years to come back up and fill that. But nonetheless, we came into that higher time frame level. So that tells us a couple of things. That tells us, one, that selling upon breaks of structure here when we start becoming bearish is highly probable. But two, we have the potential of really rolling over. However, that's where, more top-down analysis is required in the sense that, we, from a demand standpoint, swept liquidity, created that repricing event, swept all of these equal lows, came into that level in 2020, sold to buy, reprice, continued higher. So we still are technically bullish, but we are coming into higher time frame premium levels, so we could be bearish. So it's why it's a little bit stuck. But that's why we can trade within this range to where we've come into a higher time frame level. If we start selling off in the form of lower lows, lower highs, we can take it short into the previous levels of demand, higher time frame, which is why I have 8630 as a target. All right, and we can also see, this is just clear retail head and shoulders. This retail head and shoulders formed between 2009 and 2020, over a decade it took. That just proves the fertility of the markets, right? Everything happens on every time frame. So anyways, sorry for that long spiel there, but what we're looking for, let's just point out the obvious, right? Let's point out the lower lows and lower highs in the market, right? Gap filled with that. Lower time frame imbalance and supply filled with this move. Counter trend, high, low, high, low, high, low, high, low, failed, lower, low. Come back up into that demand to supply flip. We start distributing in price. So this is the lower low. This is what? Just the overall pullback, guys, right? Because this is the high that generated this low. If we're going to break structure, we really need to come back above that previous high. So we are still maintaining our bearish structure, even though we are in a lower time frame bullish run. But I think we may spill over to the downside, especially because if you've looked at the latter half of this past week, Aussie dollar and New Zealand dollar have been pretty weak as of late. So we'll have to just kind of monitor this. If you notice, we've been distributing in price. We can see we failed to generate a higher high, kind of pushed down here, had that last repricing, and then we just fell, right? We have really broken all of this structure in here. So I took it off of this level, was in a little bit of drawdown, stops are above the most recent swing point, and then we continued lower. And then I also got forget what happened. Maybe it was like a lower time frame trade in here or something like that. That's why I have this. But this is not the best risk to reward in the world. I'm just taking it down to 86.3. I mean, this is a 1 to 5. This is a 1 to 3. So not terrible, but I'm not looking for 1 to 20s because I was actually talking with a current member of mine yesterday, and he brought up a good point about lower time frame trading. And he said that he was struggling with the lower time frames to some degree. And I said that, the lower time frames provide very quick opportunities to get in and out. That's why it's so attractive to the trader, right? But we have to understand what it takes to develop a lower time frame system. Well, first and foremost, we have to understand that it's the higher time frame that drives price, right? Lower time frame is it does the same thing as the higher time frame. However, we have to have that higher time frame perspective in order to understand the lower time frame. So if we don't have that perspective, then lower time frame trades you probably will just lose. But at the same time, we also have to understand that trading the lower time frames comes with a lot of noise, and it comes with a lot of patience that is needed in order to trade it. So what I mean by this is, let's just say you have a level here, and I'm just gonna give an example. And I know it didn't work out this way, but this will still prove my point. Right, let's just say this is your area of interest and we finally come up into it, right? We push down, we push up, and then this you may look at as a break of structure, and you may look to pull back and short off. Yes, in this case, if you would have put stops here, you would have actually won the trade. However, that's not my point. The point is, if people are so quick to react off of lower time frame breaks of structure and lower time frame anything, they fail to recognize the higher time frame. What if there was an area of supply right in here? I'm just making this up, guys, but what if there was an area of supply in here that price needed to pull back into? At the end of the day, this is just a high, a low. This could have been a higher high, and then we could have melted from that region, right? So what people look for is just any little excuse to say, oh, we're now bearish. We broke the structure. We're going to pull back and short off. And then price goes up and hits their stop loss, comes into a real level or something, or even just runs their stop and then just continues or something like that. So not to say the lower time frames are bad, it just requires a lot of patience, but at the same time, it requires a lot of losses before that home run can be hit. So for instance, I had my entry right here. Don't care about all this noise. Goes into drawdown, goes into profit, goes into drawdown, goes into profit, goes into drawdown, goes into profit. Doesn't matter to me because I know the general overall bias in the market, what I'm looking for in the higher time frame regions I'm playing off of. And if I lose, then I lose. Right? Oh, well, I use good risk management and then I'm out. It's fine. However, the lower time frames, you could find a very precise level in the market where you get a very tight stop loss and you get a 1 to 20. Sure. But how many times will you have to lose in order for that 1 to 20 be hit? And guys, I'm telling you right now, lower time frame trading like that, you have to understand that it's not as like the win percentage isn't going to be as high as higher time frame trading naturally because more trades are being taken, right? Not to say that some of you can't trade the lower time frame. Some of you could be really good at it, and I'm not discrediting that. I'm just saying that it may come with more losses than wins. So your psychology has to be pristine in order to understand that trading is just a game of numbers in the first place, right? You could lose 10 trades in a row, hit the second one for a 1 to 20, and then double your money, right? You lose 10% with 10 trades, 1% each. Then you hit a 1 to 20, and then you net 10%, right? So yes, your win percentage is less than 10%, but you're still overall profitable. But people don't look at it like that. They look at it from the standpoint of, oh, I'm losing so many trades. Now I'm going to revenge trade, or I'm going to over leverage, or I'm going to do all this stuff. So that's why lower time frame trading can be difficult, especially for the younger trader, because they just don't have enough experience to understand exactly, the ins and outs of it all. But anyways, Canadian dollar, Japanese yen, very similar to AUD, JPY. Higher time frame, again, we are still bearish. And where is our overall objective? Now, again, you have to ask yourself this question, right? If you're trading in a specific direction, where are you taking profit? Right? You have to know where the market's most likely to go. And I say most likely because nothing's ever 100%. So for instance, price could come into 94 and then go long. I have my objective at 93. I mean, for obvious reasons, it's the last selling volume before this huge expansion. So I want to fill this imbalance here. But secondly, we are in a higher time frame uptrend. We actually did come up into a higher time frame level of supply. So very quickly, and I won't take as much time as I did on AJ here, but even back from 1987, or really 1985, we're in this downtrend, right? And we can just see the precision of these levels. Look at the last set buying volume here. Look at the counter trend. High, low, high, low, high, low, high, low, failed, lower, low. Turns into supply. Guess what? Whoops. Lower low formed. This is just one overall pullback. Lower high came into that level to the T. So that's why swing trading can be profitable for sure. It just takes a long time, but you can make a lot of money doing it if you're patient. But again, going down to a daily time frame, it's probably better seen there. Same thing applies. High, low, high, sort of that low there, high. We mitigate, kind of break structure, but most importantly, this is demand. That's demand, and we failed to make a higher high here. We should have just continued with the higher time frame. I mean, obviously not because we came into that level that I just spoke about, but just if this wasn't even there, if we were just looking at it from a pure market structure standpoint, yes, we should have made a higher high because that's what you naturally do. You make a higher low, you make a higher high. But instead we stopped and we made a lower low. And that's where we started the downtrend. So that will be that point of mitigation for when we come back up the second time, right? And yes, I know we already mitigated it here, but think about it like this. When the market goes like this, what do you naturally expect? A pullback, right? Okay. So what if you have a level of supply right there and price goes like this, and then we go like this. This is still an overall pullback because this is still one drive, overall pullback, two drives over, like you can have that. So you may get a tiny mitigation to start, but the overall pullback may provide that other opportunity to get in to that level. So just keep an eye on that. So again, lower low is formed, kind of just consolidate for a decade or so, to be quite honest. And we finally come back up into that level, pretty much 110. And we can see the precision of that level, right? 110 is right in here. You know how many orders are probably sitting at 110? 110 is a very strong psychological level. It's a whole round figure, right? So usually, if we're going to be reversing trend higher time frame, usually you'll see the tops and bottoms be around these psychological levels because these are where the large orders are getting in. And the large orders, it's going to take a lot of liquidity in order to place all those positions at those levels, which means they need those psychological levels because there's more liquidity surrounding those levels usually. So currently we're in a lower time frame, higher time frame bullish run, obviously. But if we are going to go long, I think we need to come into 93. So we're going to continue to look for sells because that's what we're currently in right now until 93 is hit. So that's our overall objective. Lower time frame, let's just take a look at the structure, right? High, low, high, lower low, lower high. This is just one lower low, right? One lower low. You could classify this. I wouldn't classify this as a pullback and a lower low. It's just if you base it upon the distribution that's going on in here, and this is what takes experience. I would classify this as the lower low and this as the overall pullback, right? Lower low, lower high, looking for a lower low again. So let's scale in again to the 1 hour, and we can see what is this forming. And to be honest, it looks like a microphone. To be honest with you, we're kind of expanding an expanding channel. You probably heard of that before, right? An expanding channel. That's retail. So we know there's liquidity resting above and below each of these trend lines. Retail is buying at this quote unquote trend line support. They're also selling at this trend line high resistance. What's going to happen? Oh, they're going to be buying. I guarantee you people will be buying upon the breakout, whether that be there or be here. Preferably, I would actually like to see price come back down, take out that swing point, trend line, entice sellers, come back up, take their stops, entice buyers, and then make the real move into 93 and take the buyer stop losses like that. So almost like a sell to buy to sell. That's what I would look for. But if it goes like this first, that's fine. I mean, it's still taking liquidity. The overall direction is short. And we can see in here, the most recent swing point, well, first and foremost, this supply was mitigated by that push up. Then it created the lower low. So that high created that low. Counter trend, high, low, high, low, high, low, high, low, high, low. Failed to make the higher high. We have imbalance there on a lower time frame. Just kind of zoom in so you can see that. Right, so that last buying volume, and then we still have imbalance here between that wick and this wick there. Just very tiny, but still there. Then we make another lower low in the market. Then we pull back into that level, and we start to distribute. We start to slow down in price. We finally top out here at 99, almost 99.1, but still maintain our bearish structure. We actually create liquidity. 1, 2, 3 pushes. We can see that this candlestick right here was retail, most likely, because we had 1 touch, 2 touch, 3 touch. Oh, they're looking to short here upon trend line resistance. Probably also because there might be, maybe some sort of wedge that they were trading in. But anyways, there's a lower time frame supply in here. We pushed up. We failed to generate a higher high. Just a quick buy to sell that swept buy side liquidity, and we rolled over. Okay, so that will turn into supply for our level, and that was sitting at 98.5. So that would be really good to take out buy side liquidity here and then manipulate this, retail channel, I guess you could say. So I will be looking for shorts from that level. If you guys are, more about on the conservative side like I am, you may look to just place a half risk position here. I usually start with half risk of any position I use, and then I look for confirmation. Confirmation would simply look like this. If we kind of came up there, kind of consolidated, maybe ran liquidity again, fell, generated all this stuff or something like that. Maybe we sold to buy to sell. Maybe we reprice in an area of supply. That would be a good level to take short. We sweep liquidity. We make a lower low after the reaction, and then we pull back into supply and add the rest of our risk right there, or something like that, right? Just looking for a shift in direction, but still getting in case we just come into it and then just kind of start trickling or even just dying into it, right? So 98.5 is my level. Chef JPY, very similar. However, Chef JPY is a little different, kind of. It's similar, but it's different. It's similar because we are still lower time frame bearish, and we have distributed on the lower time frame here, just like we saw on CADJ. Right, we had that last buying volume. We sold off. We pull back into that last buying volume, hence the exact reason why we fell again. Distribution in price. We have psychological level 143, and then we have our last point of supply in the lower time frame here at 143.419. So what we're doing now is we are building buy and sell side liquidity. We can clearly see that here. 1 touch, 2 touch here. 1 touch, 2, almost 3 touches here. So we're trading within this range. So what we could see is either one of two things. We may see a sell to buy to sell, or we may just see a buy to sell. Nonetheless, these two levels here would be good for continuations because this is the high that created this low. So naturally, we would expect some sort of lower high for a lower low potentially. However, I say it's different because if you look at the daily time frame, we are still very much bullish, right? Like we are on all the other yen pairs, but we have actually come into our last point of demand. So we've made a high, we've made a low, we've made a high, we've made a low, we've made a high. This is just one overall pullback. I'm still going to be selling because I have to just be currently selling with the overall trend until it breaks, right? And if we end up breaking long, well, then we can treat this as sort of like the consolidation or repricing in a sense, push to the upside, pull back, mitigate, continue. That's what we could see if we end up breaking out and if I lose that trade. But we still are being capped by the daily 50. I want to continue to look for sells just because that's just what the current direction of the trend is. 4-hour time frame. Originally, this was a beautiful opportunity that we took right in here. This is a really interesting repricing event. Right, so that was a really good trade because what we do, we're in a bullish market, higher high, higher low, kind of failed to make a higher high. Yes, we made a lower low, but we have to understand something. We can't be too quick to reverse trend. If we're in an overall bullish market, we have to think to ourselves, is this really a break of structure, or is this merely just a liquidity run or an overall pullback of some kind for overall continuations? It's most likely the latter. So we actually come down into the selling volume, fill some imbalance up, probably even mitigate some lower time frame demand down in here on a lower time frame. But anyways, essentially we sold to buy, right? So we sold to buy, we repriced, consolidated, and we continued long. We made the higher high. So that will act as that beautiful supply to demand flip, and we actually got that entry here at the time. However, we took some partials because we were coming into previous supply here, and we actually did roll over, so we did get stopped out break even, so we didn't make it hardly any money, but that's why we just have to trade manage very properly. So we actually come a lot lower, and we come into sort of a lower time frame, last point of demand there. So we're just going to see what happens. I'm definitely still interested in shorts from this level. However, I don't see a level in which to buy it yet. So I'm only interested in shorts at the moment, which would go good with AJ and CAJ. Let's see, 1, 2, 3, 4, 5, 6, 7. All right, I'm going to do Euro AUD, Euro JPY, and Euro USD, and we'll take a break. Euro AUD. This is what is very interesting. And I think that this is either going to do one or two things. This is either going to absolutely moon, or it's going to absolutely melt. And I know you're probably thinking, well, duh, or it's going to do one of the two things. But it's either going to do it in a very strong fashion, either way. And this is what I mean. Daily time frame, right? So we are extremely bearish higher time frame. Absolutely. Right? We can just see that clearly in a downtrend. The most recent swing point comes in here. This is the high. We took that high out with this high, and then we made the lower low. Right? Lower low, lower high, lower low, lower high, lower low. This is all just one overall pullback. So we could easily make a lower low again to continue with the higher time frame structure. So that we have to just keep that in the back of our mind. So where is the counter trend here? High, low, high, low, high, low, high, low. Failed to make that higher high, lower low. We like those doji candles, those indecision candles, higher time frame, within that area of demand, and then we fall to create the demand to supply flip. That's what is really enticing to us. And that's exactly what happens. We come up into that level and we have a reaction short. So what happened is we made a high, we've made a low, we've made a higher high, but we've come into that higher time frame level. We've actually made a higher low. So one of two things is going to happen. Either we're going to continue to short off with this trend, right? Lower low, lower high, lower low, lower high, and absolutely melt because of the higher time frame. We're just going to fall, or we're going to maintain our bullish structure and continue to rise. Now, I favor the latter here. I favor buys for now, just because of what happened in the past couple of weeks. So we can see that we have sort of accumulated in price, or reaccumulated. We have expanded again, and what we have created lower time frame, and it's quite obvious, is this retail head and shoulders pattern. So retail is most likely selling below the neckline here. We have one touch, we have two, and we have three. We even might have four with this move. Actually, you know what this is? This is interesting. This is a very nice, very cute break and retest. Break, retest of the neckline. People start shorting, and then they get stopped out, as they should. So before that occurred, we actually created a lot of equal highs, resistance and support. So what happened first? We took buy side, enticed buyers above the resistance level. Came down, ran their stops, enticed sellers below the neckline. We swept this previous liquidity here, and now we're starting to rise again. So I really like the buy to sell the buy, because it sweeps people out of the market before the overall move can occur. And we are still overall bullish within this current trend. So we want to continue to trade with the trend until we see a firm break. Now, if we see a firm break, at that point, we would be bearish 100%, because then the market would roll over and this would hold and we would look for overall shorts. But as of right now, we are still bullish counter trend. So we want to be, just very careful with it all, and just understand that we need to be continuing to trade with the trend until it breaks. So just because of what is forming here, right? Resistance, support, buy to sell to buy. This is a beautiful formation to tell us the market is screaming buys. That's what it essentially is, what it's telling us. Shaking people. Why would they do that? Why would the market go long first, go short, and then continue to push higher? And the only logical explanation is they wanted to shake people out long first, get them in early. The market's going long most likely. I say most likely because it's not 100%. But most likely it's going long, so they get buyers into the market first. They get them in early, right? They get them in early so they can go and run their stops. So then they can get anyone who wants to sell it down. That's fine. They can sell it. The market's going long anyways. Sell it down, fine, and then the market can go in the right direction. So now the institutions have shooken everyone out of the market, which leaves a lot of liquidity for them to get in at the best possible price. Then they can continue along with the overall trend, right? So this is how the markets are moved in that sense. And this is seen higher and lower time frame. So 1 hour time frame, now we have broken counter trend structure and we are to go along most likely. So this is a really good opportunity. And when we see moves like this occur in the market, they're huge, very strong, volatile moves. They don't come with a lot of pullbacks, especially if, this is a higher time frame, formation, buy to sell to buy. So it's going to do it relatively quickly, just like sweeping liquidity. It happens very quick, right? We have a strong sell-out, a strong pushback to the upside with hardly any retracement. So we saw some lower time frame accumulation here. I'll try to go into the 15-minute to show you guys. And maybe we can check out some, let's see the VFI here, if there's any divergence. No, not too much. I mean, we have a little bit right here, right? Volume is rising significantly, and then price is continuing to fall here. So a little bit of divergence, not too much, but it's there. Now, what happened? Well, essentially, there's all of this. It's hard to tell if this is really structure. If I just zoom into the 1 hour, it's very difficult. I mean, yeah, you can see this as counter trend, but really what I want to see essentially is a strong move, a failure to make a lower low and a higher high. That tells me this is not just an overall pullback to short off, and it's actually just a continuation long, and we should be looking for bulls to come into the market. So going down to the 15-minute again, really quick, what did we do? Well, we kind of broke out of this accumulation here, right? We sort of repriced ourselves and we went long. So we were looking for pullbacks into this level, and obviously we didn't quite, well, I guess you can say we did get it, but it's always going to come back down a second time, usually for that higher time frame retracement. But again, what is this? 1, 2, 3, almost 4, 5 touches of this trend line, shoulder, head, shoulder, just a skewed head and shoulders, right? Skewed. We end up sweeping liquidity, sell to buy. If you understand liquidity in the sense of the law of effort, you would know that a real move in the market, a real liquidity run happens very quickly. So very strong impulsive move, very strong push against it, right? So they get in, they get out very quick. And in the process, we actually mitigate this lower level of demand. We fill the imbalance because remember, there was still buying volume between this wick and this wick. And now when price came back down, now it just became between that wick and this wick. So there's still a little bit of just inefficiency there. So we fill that inefficiency and now we continue long. We actually form a little more inefficiency here. And we can see that the counter trend, low, high, low, pullback, high, low, we just blitz right through it. So in our reality, I guess you can call this more of an inside supply, or inside demand. But I have, lower time frame imbalance down in here. 1.5380 would be that overall level that if we get a deep retracement, which I just don't think we will, but if we do, great. Now we've made the higher high in comparison to that swing point. Where is the most recent structure? Well, counter trend structure, you could say low, high, low, high. We've come up into that last point of supply. We failed to make that lower low and made the higher high. So you could classify this as another level of supply to demand flip there. So we have 2 levels, well, actually 3 now, just because if we don't get a deep retracement, because, we're extremely bullish at the moment. So we could really just tap back down into the prior swing high and then continue. So if you would like to, and this is what I would recommend, I would look to place your entry here, stop loss here, take profit just somewhere way up there. I'm not going to tell you that, but somewhere up there, right? We're longing. The stop loss is here because that's where our second entry is. And then our second stop loss would go right here at the third entry, and the third entry would go here, and the stop loss would go below this overall low. So no matter what, at least we come into here, you're going to be making money most likely if it goes long. If it goes long, you're going to be in some sort of position. So if you use 0.33% risk each, because obviously we would be treating this as one trade, because if it absolutely melted for some reason, then you would only lose 1% total. But either way, let's just say worst case scenario in terms of losing money, you come down here, you lose 0.33%. You come down here, you lose another 0.33%. So now you're down 0.66%. Well, now you long it from that level, and let's say it actually goes long from this level. You get stopped out of your second position. So now, you have a 48 pip stop loss. And now what we can do is target at least the previous swing high here, but most likely at least the other high, because we're forming higher high, higher low, higher high, higher low, looking for a higher high. So maybe 1.6, that would be a good psychological level. So let's just make this pretty, 1.6. And below this previous swing point, classify that as, let's go 48 pips. So not terrible. This is a 1 to 13. So actually it's phenomenal. So 13%, but you're on a 0.33% risk. So just divide it by 3. 13 divided by 3, you've made 4.13%, but you have to subtract the losses that you had. So 0.3 plus 0.33 is 0.66, so minus 0.66 from it, and you've made a net of 3.6%, just having risked 1%. So essentially you're at a 1 to 3, almost a 1 to 4 risk to reward, which meets my rules. So that's kind of how I would look at it. I like further upside in Euro AUD. Euro JPY, we are in from this position. Talked about this a few times this past week. We had 2 positions here, one at this demand, one at the overall demand. Obviously, we just came into the first. Stops are at break even. This one right here is still valid. I still think if we come lower, price could still react off of this level and go long. But anyways, 4-hour time frame. Yes, we are overall bullish, but still bearish at this current time. And we can see that because we have equal lows. Equal lows means liquidity, means we should be attacking that liquidity before any significant push to the upside can be seen. We have our last area of demand down in here, and we can just see from a daily time frame perspective that we are extremely bullish, making higher highs, higher lows, high, low, high. Whoops, let me do that again. High, low, high, low, high, low. We're still maintaining structure. I want 150. 150 would be that overall level for me. Why? It has to be a why, right? There has to be a why. Can't just pull it out of my butt, right? 150 because it's previous swing high, and we're in an uptrend. So naturally, you'd want to take out the previous swing high to make a higher high. So that's liquidity right there, 150. What we can also see in here is where's the structure again? You can classify that as a high, a low, a high, a low. This could be classified as an overall higher high. If we have an overall pullback, it wouldn't be a break of structure to take it short, most likely. It would just be an overall pullback to continue long. And we can see that because what happened? Obviously, we're bullish. We create equal lows. We create equal highs. So we sold very strongly into that demand. Let's look at it from this perspective. Higher high. Well, first and foremost, liquidity run. Sell to buy. Breaking structure. Boom. Broke the structure. We repriced. You could have easily had a position here or here. And obviously you wouldn't have gotten in, but you're not going to be perfect 100% of the time, right? Sometimes you just won't get into trades. But anyways, you make a high, you make a low, you make a higher high. So where's the next level? Counter trend. That's what you got to ask yourself. Low, high, reprice, continue. It's exactly where you could have gotten in here. Boom. Again, counter trend again. Low, high, failed, higher high, pull back, mitigate. It's another one. But we actually come down again. So if you didn't get in that one, this is still valid because this is the low that generated this overall higher high. This is one expansion. Overall pullback, one expansion. So in the process of mitigating this level again, we sweep liquidity. We have to build liquidity before continuing in the overall direction. That's how the large orders are placed. They can't just place them willy-nilly. You can't just place your positions however you want. It's just not how the markets work. For every buyer, there has to be a seller. So in order to place hundreds of thousands of standard lots at this level, they need hundreds of thousands of standard lots on the other side of the market. How do they do that? They free it up. So if people are buying right here, if it comes down, hits their stops, they're forced to sell back their position to the market. That's how they get out of a position. It's not just you see on your MT4 account the loss that you incurred. Yes, that is the result of it. But in terms of the logistics, when you're buying and you get out, you have to sell back your position. You bought something. In order to not buy it anymore, you got to sell it back to someone else. But you're selling it back at a worse price. So everyone stopped out. Now there's liquidity giving back to the institutions to now, if they're selling back their positions, now the institutions have someone to buy from. Now they can buy down here. And that's why they clear sell to buy occurred. Anyways, continuing. Repricing event is right there, that little doji candle, a lot of imbalance. So now we start the overall uptrend. And you can see this is probably the higher time frame distribution, potentially. So we could see, you know, either a push up here, maybe an overall pullback, and then we continue, or maybe we even just fall now. I'm not expecting that, but if we do, then I would still classify this as an area to be looking for buys, higher time frame. So around 129 or 130. 130 would be a good level as well. Okay, so 4-hour time frame. Equal lows. So if we are to go long again, I think we need to come back down into here. So where's the counter trend? Well, you can see a low, a high, a low, and it's tough. Yeah, that is a high, that is a low. So you'd naturally expect price to come into here and fall, but we ended up sweeping liquidity. So if you ended up selling it here, yeah, you would have gotten stopped out, but then you would have recognized this was a huge buy to sell, reprice, continue, and then you would have looked at that level. So yeah, I mean, it's not going to be perfect every single time, guys, but you just have to adapt to what the market's telling you. So we come back up, sweep descending liquidity into that imbalance, into that prior supply. We push down, again, look at the counter trend. High, low, high, low, high, low, failed, lower, low. That is supply. So this is the high that generated this overall low. This is one expansion. Now we're just seeing some sort of very slow pullback. So this is why I still have sell limits at that level, 143.86. So there is your free signal for the week. Equal highs here, meaning we're most likely going to be running this liquidity before potentially coming short. So that would be a really good excuse to buy up into it to sell off again down into 137. Would be a good 1 to 3.5. So it's not terrible. You could even put your stops. Well, this is a very strong move, so that's why this is the most appropriate stop loss you could have. But still, 1 to 3.5 is not a bad trade. It's really not in the grand scheme of things. Even if you just had that one trade for the entire month, 3.5% times 12 is over 40%. That's a pretty darn good return for the year if you're in the world of investing, if you understand it. So anyways, lower time frame, we sweep liquidity. All this is just mitigation trade, lower time frame. I'm not going to get into it, but anyways, we sweep liquidity here. These 2 wicks, we come down and we take out these lows. All right, we sweep it, we push up, we reprice, we fail to make a lower low, and instead we drive higher, make it a higher high. We have broken this structure here, closed above that previous swing point. So now we're looking to attack buy side liquidity before then attacking sell side down in here. So we had 2 levels of demand, and in the process of that, we were forming, well, I guess I won't draw that up. But anyways, 1, 2, 3, 4, 5, 6 touches of this trend line, retail trend line, they're looking along it. Nope, sell to buy into our level, first level. If we end up coming lower, then I still want this level for continuations like that. But anyways, that's what we're going to be looking to attack. So 143.86 is still valid for shorts. I still think 139.42 is valid for longs here if we end up coming down and taking out Friday's low. Or actually, that's Thursday's low. But anyways, you can just see, it's not going to be pretty every time, but if you understand the concepts and how it works, it becomes easier over time as you see it. Euro USD. So we had a huge bullish push on the dollar, right? So XXX USD is falling. Do not get so enticed to then turn around and buy dollar. Don't get so, enticed to go and sell Euro USD. I have this area of interest for shorts because it is a repricing and we did break the counter trend structure. Well, we broke this structure here, right? However, if you're in a bullish uptrend, couldn't you assume that if price goes like this, do you think that price could just go like that? Yeah, we broke the low, but is that a real break of structure? We have to think about it in terms of probabilities. We're overall bullish. So price is not just going to be 100% perfect, break this little tiny structure, pull back for your convenience and take it short. It's not going to always do that. Sure, you could get lucky and that happens, but the probability says that, we're in a higher time frame uptrend. We could easily just continue long. So if you're going to short that, I'd probably wait for some sort of reaction. I'd probably wait for some sort of, reaction there, a lower low again, the failure to make a higher high, and then we can look for pullback to sell into our higher time frame demand zones. Just like this on AUD/USD. Remember on AU that we had this right here. Same concept applies. High, low, high, low, high, low, high. You come all the way back down. You're looking like you're breaking structure. And then guess what happens? Oh, you just keep going up again. because we're overall bullish, right? We don't want to just be so quick to think that it's a reversal. That's why so many people lose, is because they just immediately judge that, oh, we broke in structure, just the most recent swing point that they see, and all of a sudden it's just going to just tear to the downside and break. That's really not always the case. So I am not going to be selling here, guys. If you want to sell, you can if you want to. But just from a probability perspective, this is not highly probable because we are so overall bullish. What is probable are these levels down in here. This is, any one of these lows, we created a higher high essentially. Overall pullback, higher low, higher high. This would just be a higher low. So I have a couple of levels down in here if we get the pullback. 106.35, just the start of the last demand zone. We have imbalance 50% at 1.058. And then we have a lower time frame demand zone right here that we swept liquidity from, sell to buy, reprice, continue at 105.450. So that's probably what we're seeing now, some sort of trend line liquidity run before continuing, enticing sellers, and then overall we're still very much bullish. Now, I'm not saying this can't work out. It's just not as highly probable. If, let's just say we were in a downtrend. If we were in a downtrend, if we were making lower lows and lower highs, and then we had the counter trend like this, boom, boom, reprice, and we fell, then yeah, that would be a beautiful level of supply to take off of, because we're in a downtrend, but we're not. We're in an uptrend, so we have to be very careful. So I would just maybe wait for more confirmation from this level, see how price reacts off of that level of supply. All right, so that is, I'm going to take a break here, and then we're going to go over the rest. So I'll take like a 5-minute break, take some questions, and then we will continue for the rest of the session. All right. What do we have? Yeah, I'm going through it, guys. I'll go through. I already did EU. I'll probably do GU here. Actually, GU's not one of my pairs. I'm actually not going to talk about GU today, just because I just don't really have anything that's interesting, and it wouldn't be of value to you guys. How many times do I have to say? I don't trade gold, guys. I don't trade gold. I don't trade anything but Forex. I've said it every single live session. People still ask. That's okay. You guys might be new. That's all right. How long have you been trading? A little over 5 years, almost 6. Any other questions specifically about the pairs that I just went over? Anything that you're confused about? Anything specific that I could help you answer? Any kind? Remember, guys, everything given here, these are not signals. I'm not telling you to buy or sell at these levels. This is just analysis to help guide your overall bias, to help you with understanding how the basics of smart money works. I won't be going over Eurochef. Sorry, it's really disgusting right now. Eurochef. The average trade size. I risk 0.5% to 1%. Guys, please do not just go based upon lot size. That just shows ignorance, okay? Lot size is going to be different for every trade because you have a different pip stop loss. You need to be using percentages. I mean, just turn on the TV and go to the investment channel. No one's going to mention anything about pips or anything like that. Everything is based upon ROI. Everything is based upon percentages. So it probably would be in your best interest to do the same. Have I went through AU? Yeah, I've already talked about AU. Sorry, bro. Do you use any currency correlations to help with certain pairs? I mean, yeah, like I said before, like I'm looking at the majors. So obviously, we're looking at overall dollar shorts. However, we're currently dollar bullish right now, as of right now, short term, but overall, we're still very much bearish on the dollar. So in that case, I mean, you can kind of just put 2 and 2 together to say, okay, well, if I'm shorting or if I'm longing EU or something, then maybe there could be a setup on AU or NU or GU or something to long as well. But at the end of the day, guys, what's going to tell you if Euro USD is going long or short is Euro USD itself. Nothing else is going to tell you. Euro USD is a 100% correlation to Euro USD, if that makes sense. So do I use news? I mean, I look at news, but I don't trade it. Trading news is indicative of, again, the wrong mentality in trading. It's gambling. Go to Vegas, you can gamble your money and you guys can get hammered doing that. You have a lot more fun. Trading news, oh my gosh. How do you trade during news? Guys, please, oh my gosh, please. Trading news, you can't. Don't do that. You know why? Because the market is going to do everything it was already meant to do anyways. The news is used as the excuse. The news is not random. If Euro USD is going to absolutely die during news, who's pushing the market? How is Euro USD dying during news? Who's pushing the market? Where is the liquidity coming from? It's not coming from thin air. It's coming from someone. It's coming from these institutions. So they're the ones moving the market. So that's why news is irrelevant. It does not matter. It is used as the excuse to inject volatility into the market, to come into levels, to do what it was always meant to do anyways. So if you trade the news by itself, just don't do that. It's not smart. It literally screams ignorance. So no, I would even recommend don't even look at fundamentals. It really doesn't even matter. Price action tells you everything you need to know. What do I think about scalping with smart money concepts? Well, sure, you can do that, but you have to understand the higher time frames, right? Because you got to be trading with them. And if you're just looking at the lower time frames, you're scalping it, and it's not within the higher time frame order flow, chances are you're not going to win the trade. But yeah, it's possible. I mean, like I said, the markets are fractal. Everything happens on every time frame. Opinion about day trading. I just personally don't do it. I just don't like the psychology that it brings. A lot of traders, most traders are scalpers. Most traders lose. Kind of correlates. Tips for a new 100K funded account. Use good risk management. Take your time. You know, you're not meant to flip it. Aim for like 5%. So use, quarter to a half risk percent. I mean, at the end of the day, people lose because if they lose a trade, they want to immediately make that money back. They're never able to sleep soundly at night knowing that they've lost money because they immediately think they've done something wrong. Losses occur. We have to just understand that. Just keep use all of your confluences, all of your rules for every single trade. Use good risk management. You're going to be fine. You talk about AD/NZD. Let's see if that's part of my pairs. Yeah, it is. I will be talking about that. Yep. So I think Euro USD will reach 117.863. Do I think it will reach 117.863? Higher time frame. Let me check. I think it can reach 1.7 at least. I mean, that's higher time frame. The last buying volume from end of March 2021 to end of May 2021, that last buying volume. Overall, I guess you could say we're in a downtrend, but we came into a weekly time frame demand. So I think we could absolutely move. We could even come into 1.2, 1.3. I mean, this could be a long-term buy for Euro USD, potentially. But if we are to go short again, higher time frame, I think at least 1.17 needs to be met. How many trades should a trader make per day? A trader should make as many trades as the market gives them. See, you guys have to build confluence with your trades. If you don't get it, sometimes I don't trade for the entire week. If I don't get my setup, I don't trade. Sometimes I don't trade for the day. Sometimes I have a couple of trades a day. Sometimes I have 10 to 20 trades a week. It's just dependent upon what the market gives me. So you should never aim for the amount of trades. You should aim for the probability of the setup that you have and not to force the setup because that just comes with losses. Just got to build confluence for each and every trade. So there is no answer to that question, unfortunately. Trading becomes difficult once risk management is not adhered to. Yes. It's like a domino effect. Over leveraging leads to so many other problems. Psychology is huge. Do I use fibs? Not really. It's just to show if I'm in discount or premium, but it's not like I don't base my trades off of fib levels, because that's retail. It makes no sense in terms of how buyers and sellers interact with each other. Do I trade patterns? No. I use patterns as a means to trade against what everyone else is doing. Just like a wedge pattern, right? If I see a huge push to the upside out of a wedge pattern, I know most likely people will be buying the breakout. They're going to be very happy. And then the next day, they're going to realize, oh, I blew my account because the trade went against me. Big buys to sell and sell to buys out of patterns occur because that's how liquidity is built up with retail traders. So I observe the masses and do the opposite. Can't be following the herd or you can get slaughtered, essentially. Best trading books, charts. I don't read books when it comes to trading. How to kill anxiety during trading. Ooh, that's a good question. Use good risk management every single time, because you shouldn't be scared to enter when your setup comes. But at the same time, if you lose and you use good risk management, you have to expect to lose at some point, right? No one wins 100%. Losses occur with you, with me, with the best trader in the world. It's just how it works. So working on your psychology is absolutely crucial. I would say that many people, when they fail, they think it's something to do with the strategy or something to do with, they don't understand the concepts enough. It's probably most likely to do with psychology. All right, we're going to get back into the charts here, guys. I have a few more setups that I want to go over, some really good setups, actually. But I'll take a few more questions, and we'll get right back into it. Reminder, this is the last live session for the month. We will come back sometime in March, but we're going to be doing some YouTube videos for you guys. And yeah, we're going to be coming out with that new course soon. So this course, I'm contemplating whether I want to have it just be a part of my overall program or potentially allow the public to purchase it separately as well. I'm not sure. It's going to be free for all you current VIP members. If you guys are in my VIP, you guys get it for free, 100%. Like I say, if you join, we want to focus on your education, not about upselling you, because that's not what we do. That's just, it's terrible. If you've been upsold by people, it's probably because they're just looking for a quick buck. But I have to still respect my value in terms of what I provide. So, those of you who are not a part of my program but still want sort of, maybe, I wouldn't say an all-inclusive course. It's probably going to be more in depth than other ones. But I'm contemplating whether I want to sell it individually or just have it as a part of my overall program. I'm not sure. We'll see. But anyways, we have another thing that I want to talk about. I'm not allowed to talk about it here. I have been told I can't talk about it here. So what we will be doing over the next couple of days to the next week or so is I will be posting some stuff on my personal IG. So if you haven't followed my IG, it's at Ariel__FX. It's a double underscore. Be sure you follow me. I'm going to be posting a lot about this really great opportunity. I want to talk about it, but I can't. Not allowed to. So just follow my IG. I'm going to be posting that stuff there over the next couple of weeks. What do you drink? I'm drinking Coke and whiskey. I'm just kidding. I'm drinking coffee. How did you learn trading? I learned trading through failing day in and day out for a good solid year. And then I met my mentor, who was an institutional trader for over 2 decades. And he was quite frankly a hard ass on me. This is why I come across as a hard ass and not a lot of other people. I'm very strict with my students because that's how they learn. But yeah, he was awesome. He was great. I'm in VIP and never gained access to the site course. All right, yeah, message me and I'll pick up that access to you. Sometimes the system can be a little iffy, but I'll get you access to that. Just send me a message. All right, I'm going to go back into the charts, guys, and then we will finish up with some questions. All right, cool. Let's do it. So we already talked about Euro USD. We're going to talk about Euro CAD next. So higher time frame on Euro CAD. Are we heading bullish or bearish? In this instance, it's a little tricky. Sometimes, like I said before, you can ask a 5-year-old where we're headed, and they would probably tell you, right? In this case, it's kind of tough because we are bullish, but at the same time, we are bearish. However, we're not too focused on that right now. We want to focus on the here and the now. We're not trading for the next couple of years. We're trading for the next week. What setups next week can we find? Right? So currently we are extremely bullish. We just look at this time frame, we are very much bullish. We are approaching 1.4646, which is a prior level of resistance. So obviously, naturally there's going to be liquidity resting above that level. So that's why we want to buy up into it. So within the daily time frame, above these equal highs, because we have equal highs here, which I'll show you in a little bit. I'll just scale in and show you. We have that high here that we have not taken out to the right. So if we are to take that out, you have to ask yourself this question. If you are looking to buy, right? We're looking to buy here. Market is in an uptrend. We're above the daily 50 EMA. Where are we buying into? Where would be that point in which the market, if it's going to go against us, would reverse? And I'm not saying that we're going to be selling at this level. I'm just saying that if the market's going to reverse on us, this is where it would do it. Please do not take that as I'm telling you to sell that there. Please don't. I'm just saying, what probability is there at what certain levels would price reverse on you? Well, there's a probability here, there's a probability here, 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 and here, but the highest probability is right there. If it's going to do it, we could easily just see it block stuff, right? We could just continue. But that's why you have to be smart and say, okay, if price is going to go against me, where would that occur? Here, so I should be taking my profit. So you can just see this is really just the last buying volume, our last pullback prior to these equal highs being formed. So this is our most recent order region. And the flip was high, low, high, low. We can see that reaction, just that daily time frame push, and then we melted after that. So that would be that supply level there. So 1.4735 is where we're aiming. Currently, we're very much bullish. We had equal lows. We sold to buy, higher high, higher low, higher high. Again, same sort of deal. 1 touch, 2, 3, 4, 5 touches. So much retail liquidity resting below this trend line. People are buying at that trend line. So what price is most likely going to do is to take out that liquidity, come into our, I guess you can call it 3 levels. I have one here, just like a lower time frame level of demand, because we can see this is supply, lower low, we pulled back, we reacted off that. Lower low again, most recent supply is now in here. So we have reacted off that. We failed to generate lower lows here and here, and we instead made a higher high. So that will be our regions for demand. So let's scale into the 1 hour. We can see when we swept liquidity here, we started to accumulate. That was our last sell to buy, and we repriced, and then we continued. So we have 3 regions. We have this lower time frame region of demand here, just below this trend line. We also have 1.4350, which is really just where we swept liquidity to begin, just our last overall selling volume before the bulls started to come in. And then we have the lower time frame repricing right here. So again, you split up your risk, right? Split up your risk 0.33% and on and so forth with those 3 levels. And then we have strong conviction for this trade because EuroCAD has equal highs as well. We can see this high never took out that high. Yes, this high took out that high, but we never took out the higher time frame swing high to the left over here. So that's why I'm very strong on looking to buy EuroCAD into 1.4735. So those are our levels. So that's EuroCAD, GBP, AUD. So with GA, and this is really where we're going to be going over USD CAD next. So USD CAD is going to be very similar to GBP AUD in the terms of its concepts. So this is what I mean. Higher time frame on GBP AUD. We are bearish. However, we had swept a ton of liquidity with this huge sell-off that occurred, sell to buy. So we could stop and go long, right? We're looking for sells, so we have to ask ourselves the question, where could price go against us? So essentially, where would price go long from? And we just have to be looking for areas of demand. Not to say we're going to be buying at these levels. I'm not buying at these levels. I would just be taking profit at these levels. So we can see this is where the liquidity was first run, right? It was first run right here very strongly. We pushed up, had an immediate reaction, reprice continued. So I have 2 levels, and they happen to be at psychological levels, 1.71 and kind of close to 1.69, 1.6888, right? Yeah, 3/8. But anyways, we made a high, we made a low, we made a high, and now we're starting to see lower prices. We've kind of broken structure here. Doesn't mean we're just going to be going short. It just means we might see an overall retracement before potential continuations long occur. So those longs could occur if they're going to at 1.7 or this level here, right? Could dig a little deeper, but that would be a good area for profit. So we're currently in a downtrend, lower time frame. Where did the market reverse? We made a high, we've made a low, we've made a high, we've made a low. We came into this area of demand. You can see that last buying volume followed the last selling volume before the buy up. So that is the start of the demand. That's exactly where we came into. We failed to generate a higher high in this uptrend sequence, and instead we made a lower low. So that's exactly why we swept descending liquidity here, built it up, huge run up. It was just to mitigate this. Sometimes momentum, I mean, you shouldn't be scared of momentum all the time, because momentum is used as the excuse sort of to get in and out very quickly, to sweep liquidity, mitigate a level, and then just immediately reverse and continue lower. So that tells me the law of effort states, when we see very strong impulsive moves with very slow and steady retracements, it's most likely to continue in the overall direction. However, the law of effort also states that if you're going to push out very strongly and immediately fill in all that imbalance and pretty much take away the entirety of the initial momentum as push and sort of like eradicate it within the same move, that tells us that it's most likely a huge buy to sell. We're most likely to pull back and then continue short. Right? So we can classify this as an overall pullback. We came into the 61.8, 50%, so we're in premium. Not to say that we're selling from the 61.8. That's not it. We're selling from supply. I didn't sell it here, though. I'm just being honest. I didn't. But I'm just showing you that we are in premium upon this pullback. So this is one expansion. This is one pullback. We have broken the low. We have made a lower low. So this is the high that has generated this new low as of now. If we make a lower low here, well, then that would be that low, and we could pull back and go short. So essentially, this is the current range of the market. So we need to be looking for pullbacks into premium price to go short. Now, one of two things could happen. We could continue with the lower time frame, meaning lower low, lower high, lower low, lower high, lower low, possibly, or we make a lower low and have the overall pullback, and this acts as buy-side liquidity. Run that liquidity and then go short into our higher time frame objective. So I really do like GBP AUD this week. I will be looking for shorts here. We have a 1 to 10 and then a 1 to 3. So the reason for this is because we may not have an overall pullback into the supply region. We just may not. It may not pull back that far. I'm personally not going to be selling upon a pullback into like here unless I see something like this. Unless I see like a clear counter trend, maybe liquidity form, buy to sell, we break, we come up into imbalance of some kind, we sweep liquidity and we make a lower low, we can pull back like that potentially. But I think that it's going to act a lot like USD CAD, which I'll show you in a second. And this is going to act like, buy side liquidity to go and run before continuing lower. So I have 1.77, just getting back up into premium price. Essentially, it doesn't, the only, confluence I have for this particular trade is just a psychological level in premium. So that's okay to twin trade it, meaning I can split up my risk, 0.5%. If we just come up into 1.7, kind of just quickly take that liquidity here and here, we may just continue to run short. And then at that point, 0.5% would yield me 5% on this trade, which would be really good. But if not, if we come up a little bit higher, we have our first position here, stop losses at our second position, and then our stops would go above the previous swing point. So we lose a 0.5%. If we win this one on 0.5%, then we win like 1.6% minus a half, so a little over 1%. But at the same time, the probability, meaning the risk to reward between the two, you have to average them. 10.3 plus 3.2 is 13.5%. Divided by 2, that's what, like 7.75% or something like that. So that's the average risk to reward for these two trades. So we could get lucky and only come into the first entry. That would be really awesome. But if we come into the second one, no worries. As long as we continue with the bearish structure, the net profit would still be, the net profit would still be in profit, essentially. So that's what I'm looking for, 1.77, 1.7758 for continuations into 7.1 and 6.888. All right, USD CAD. USD CAD is very similar. However, I do have a couple of other regions of price a little bit higher on USD CAD. So let's just quickly break it down. Higher time frame, we have come into a higher time frame level of supply to the left. We have finally come back up into that region. So in all reality, we could absolutely just tank. We're looking for shorts anyways, so that would go fine. However, ask yourself the question, if the price is going to go long, because we still currently are in an uptrend, where would it go long from? And most likely that would be 1.321. It's this last selling volume before the huge expansion to the upside occurred. So it's kind of retesting that level. At the same time, we have equal lows right in here. Let's just go down to the 4 hour. Right here, that low and that low, equal lows. So that's what I want to take out. We're currently still in a downtrend, and I want to continue to look for sells. So I know it's blurry. I'm just zoomed out here, but the structure is high. Oops. Do that again. High, low, overall pullback, high, low, overall pullback, high, and then looking for a lower low below that swing point. So we can see that on the 8 hour time frame, we came up into our last, maybe you can qualify it as a sponsored move, just our last buying region on the higher time frame before the lower low. We swept this high and these highs there. So yeah, overall pullback, short. And we can scale down to, again, maybe the 4 hour. Yeah, and we filled the imbalance there. Just selling volume, we filled that very nicely. So this is a lower low. This is the range between this high and this low. So we want to trade within that range. So this is just an overall pullback, and then we finally started to fall again. So more of a distribution prior to continuing short. So we came up into that level, distributed in price, failed to make a higher high, and we instead made a lower low, and that's where we started the downtrend here. On the 1 hour time frame, lower time frame structure would tell us, okay, well, lower low, lower high, lower low, lower high. We came up into that last point of supply and made a lower low. So where do we want to pull back into? Well, this is the range now here. So we want to pull back into something in there. Now I will say this, guys, just because you are trending short and you can see the clear range between the high and the low doesn't mean to just randomly sell it upon a pullback somewhere, right? Yes, it's most likely going to respect market structure. We have to build confluence for every trade. We're not just naturally going to just sell it somewhere when it gets up into here, right? We can't do that. That wouldn't be smart. We have to build confluence. So what we did see is we saw, the counter trend here, high, low, high, low, high, low, failed to make a higher high, lower low. So that sort of doji candle repricing event before the continuation shorts. We had a huge sell-off, reprice, continue short. So that's exactly where we came into to the T. We sold it there, got the fill, 3,520, and then we rallied lower. Stops are at break even 100%. Partials, most of my position is taken off. But what else can we see? Remember, like before, huge buy to sell, and attract buyers and then take their stops lower. Same thing in here, right? We had relatively equal highs, equal lows. What do we do? Buy, attract buyers, attract sellers, and then come back up, mitigate everything, and go short. So into these two levels of supply, better seen on the lower time frame. We had the reaction. We made a low. We failed to make a higher high, and then another lower low. Well, really right down here. But then we had the overall pullback, swept liquidity again into our supply to mitigate. So we called those two levels out. Did take partials when we broke the previous low, because that's just what we teach. That's the first take profit level. The second take profit levels, and the third, if you have more than two, would be based upon what the market is telling you. So meaning you have to look left. We can't, we don't just take partials levels at 1 to 3s, 1 to 4s. That's stupid. You got to place them at levels in which market could reverse. So where would that be? We have sell side liquidity here, 1.321. That would be our overall level. And if you wanted to leave a runner, well, you'd still take more partials at that level because the chances of it rising from that level increase, right? And if you wanted to sell it off maybe into this imbalance, or I don't know, just somewhere down in here, well, then you can have another take profit down there, wherever you think the market could reverse. Taking partials is not just based upon your gut feeling. It's not based upon, this is a good amount of money, let me take my partials now. No, because you could be leaving money on the table. You need to ask yourself, where could price potentially reverse from my trade? That's where you need to be taking partials. So lower time frame, 1 hour. We've come up into that. We mitigated. We made a lower low. So where's the new structure? Low, high, low. Again, the same sort of deal. We mitigate that level. High, low. So what naturally happens? We sweep liquidity, buy to sell, And now we come back up, mitigate, and continue short. That's what we're looking for. So we're currently sitting in a little bit of drawdown at the moment. We did get that mitigation on Friday. 15-minute time frame, we can see that after the reaction from the level, we had that repricing, and then we continued. A lot of imbalance that we needed to fill. So, the same sort of deal that happened over here, right? Boom, boom, right? Buy to sell to buy to sell, essentially. Filling up, taking all the liquidity coming up into the real zone. Buy to sell to buy, coming up into the real zone to hopefully to sell down into 1.321, right? So that's what we're looking for. So what I want to see is price to open and pretty much price to just fall. I don't think it needs to go. I mean, it could come a little bit higher, maybe up into imbalance up in here, but that's why stops are placed above that swing high there. So, price is already in the region that it needs to fall from. So essentially, it really needs to kind of fall now. We can just see, look at all this. 1, 2, 3, 4, 5 touches of this trend line. Retail is definitely in buy. So we know price is going lower. It's just a matter of when. Now we have to look at it from this perspective. Let me just get rid of all this stuff, not to confuse you guys. So you remember lower time frame, we said, the range is from here to here. We wanted to pull back to go short. Same thing here, from here to here, pull back to go short. Same thing, here to here, pull back to go short. You know how we swept liquidity every single time? Hold on, I don't know why it's doing that. Sorry, guys. We sweep liquidity like this, buy to sell. Sweep liquidity like this, buy to sell. Sweep liquidity like this, buy to sell. That's what we're looking for. So with that being said, we can be looking at the higher time frame and understanding that, okay, well, where is still the overall, this is the overall swing high that has produced this overall move here. So what if it's a higher time frame, sweep the high, buy to sell? Could we see that? The same thing happened here, buy to sell, buy to sell, buy to sell potentially. Could it be a higher time frame, highs, buy to sell, coming deeper into this level? Yes, that could occur. Everything happens on every time frame. So just like we had the lower time frames, it could be the same thing here. Overall expansion, overall pullback, overall expansion. 1.321 is our overall target. So what I have is I have the inside supply right in here. So we had the outside supply, but we also have the inside supply here. So this level we could come into, we retrace, we would definitely take out that high if price is going to come higher. So we would take out that high, have the overall pullback. We would sell it in this region of price. Now, I also have 1.36 psychological level to fill up some of this imbalance that we have created here. So that provides us with two opportunities, which allows us to reduce risk on both of them. So I'm going to go back to the 4-hour. And essentially, that's what this is. First area of interest, stop losses at the second entry level. Second entry levels at that level, and then the stops would go above the previous high. If we end up just absolutely blasting off and clearing that high, well, then we just have to take a step back and reevaluate what the market's doing. So currently in shorts now, if we get stopped out of those, then I will be selling half risk here at those levels. So what is that? That is 335, 375, and then 36. Overall shorts are expected on USD CAD. It's just, are we going to pull back before we go short? All right, a few more left. USD JPY. So same sort of deal. Dollar is quite strong at the moment, but overall we're still bearish. Now, if we look at the daily time frame, yes, we are seeing, don't let this scare you guys. Don't let this scare you here. This is just, it's probably meant to entice you to either take long positions, close out of any shorts. You might see some momentum coming into levels, but overall we're bearish. We need to be looking for shorts. We have this prior low that we haven't taken out yet, and I think we will run that low if we let's just say we already go long, right? I'm not saying we're going to go like that, but let's just say we are. Let's just say we go like that. How is price going to do that? Most likely is if we take out that low first. And what I'm not saying, guys, is to buy it below the low. I'm not saying that. I'm just saying you have to ask yourselves these questions, right? Building confluence, building probabilities. If price is going to go long, it would probably need to sweep sell side liquidity first. So that says if we come up into these levels of supply, well, we haven't taken out that low yet. It's a conviction that we're going to at least attack those lows, which would provide us with profit. So I had two levels. This is just acting as sort of buy side liquidity that we're running at the moment. We do have sell side liquidity here. So with the most recent structure point, we have a higher time frame one right here that has not been mitigated. This is why I still like this. This is supply. We swept liquidity here with that push, and we fell. We failed to make a higher high, lower low. We never retraced up into that level. So I like that. Just like I like Euro JPY from that sell position or that sell level here on the higher time frame. Just like I like that one, right? So with UJ, I like that higher time frame level. Stops would just go right above that swing high there. But intermediately, like in intermediate structure, 1 hour time frame, we could push up into this level. Remember the fact that we swept liquidity. This was back in the beginning of January. We swept liquidity and we came up into obviously this overall huge buy to sell. So that structure point, I'll just zoom back out so I can show you. Right. Swing point here. Right. Last pullback that mitigated this level, that swept these equal highs that fell. We mitigated that by sweeping this previous high. So we swept it just by a little bit liquidity run, and then we continue short. So that acts as a good area to be looking for pullbacks into. So we can see on the 1 hour time frame, all of this is probably all just noise. It's all just lower time frame liquidity to run very strongly and maybe just continue short. And if we come a little higher, then we'll come into that level and hopefully short off from there. But we can see that repricing event that took place. So counter trend, high, low, high, low, high, low, high, low, failed, lower low. We did not get the mitigation here at that time. So that's why I think we can still come up into that level. So dollar strength, we may be enticing some buyers with momentum, but overall, I think we can still short off. So that's UJ. NZD CAD. So with NZD CAD, it's interesting because we still are overall bullish within this market. But I think after, let's see, October 2022, December, about 2 months of a 1,200 pip move, I think we may see some relief. This previous high swept that liquidity. This liquidity we came deeper into, I guess, this supply. So we've swept liquidity since November of 2021. So over a year ago, we finally swept all that stuff. So I think we may come back down, relieve ourselves a little bit of this low resistance, and then, pull back and potentially continue higher, but for the short term, maybe continue lower. So at this moment, obviously, in here, we were looking for buys all day long. We finally sold off where now we're looking at breaking structure. So the most important thing is the fact that, we had a pullback. We failed to make a higher high. And if we make a lower low again, that would be good for pullbacks to continue short. So we came back up into this daily time frame, and really it's still the 4 hour daily, 1 hour, doesn't really matter. It's really just this supply level here. Our last buying volume before we sold off, and we ended up, instead of making a higher high, which you could have easily naturally expected, it actually stopped, and now we're making potentially a lower low. So that's where we're seeing, the NZD AUD weakness here. So that's why, our Euro AUD longs, or potentially even Euro NZD longs, could come into play. So 4 hour time frame, you can still see the same thing. Right, that little repricing we continued. So all this is kind of just noise in here. I'll kind of just scale in to show you what was going on. So essentially, we came up into that level, we stopped, we failed to make the higher high, we made a lower low. Right? We created sell side liquidity and buy side liquidity. So we sold off, enticed sellers below this trend line. We pulled back, took the stops of the sellers, enticed the buyers above this breakout here, and then we continue short. So now we're sweeping people out of the market, and now I think we will rally lower. So because this is such a strong move, we may not see a deep retracement. So that's why you can look for sells around 8,550, and then sells from our last sort of buying volume that failed to make a higher high, and we made a lower low, so 8,608, something like that. So I am looking for shorts here on NZD CAD. AUD NZD. So with AUD NZD, for anyone who is new, I'll quickly go over the higher time frame perspective here. So we scale out. This is really, really cool. And I've already been over this before for anyone who has already been, coming to these live streams. But currently, the current market is bullish, right? You can just clearly see that high, low, higher, high, higher, low. Potentially looking for a higher high, right? We scale out. Let's see what happened over here. See that low from 2015? Finally taken out with this low from 2020, the COVID crash. In addition, not only did we take out that low from 2015, we created an ascending liquidity channel kind of from or before coming into that higher time frame liquidity. So 1, 2, 3 touches, retail's looking to buy, and they were sadly surprised that we sold off, sell to buy, we repriced, we continued, right? So this is also, whoops, we just extend this out. This is also the break and retest. 1, 2, 3 touch. Oh, we break, entice sellers. Oh, we pull back, we retest. Oh, we start to go short. Nope, right back to the upside, take their stops again. So that becomes the repricing event. So having that understanding, we have finally broke counter trend structure. So we were bearish, sell to buy, we made the higher high. So what do we naturally expect? A higher low for a higher high. It's just the same thing, just higher time frame. So again, we ended up creating a lot of liquidity, doing this, doing that, doing this, doing that, and we finally took it, sweeping all of this liquidity, freed up to then continue. So where do we come into? Perfectly into that repricing. So we come up into that repricing and have a huge reaction from it. So we created a demand. Now, this is interesting because if price was like this, I probably would not have bought it from here just because this is still supply that we came into. Could this be a low, a high, a low, a high, and a lower low? Yes, but we did come into this region. So it's a good sign that we're seeing their reaction. But what I want to see would be the failure to make a lower low, mitigating that demand, higher high. Then we can be looking to take it long upon the third drive, right? So we get out of this, and that's exactly what occurred. So we failed to make a lower low from this prior swing point. We mitigated this demand here. And then the counter trend, we can see low, high, low, high, low, higher high. We broke it. We repriced or pulled back. Again, failed to make a lower low below that low, stopped and made a higher high. So this becomes that demand to play off of. Okay. So now 1.05 psychological level. We go over to the right. And again, just like this formed a higher high, higher low, we formed another higher high, another higher low, mitigating it to the T. So now scaling in, how do the institutions move price from 1.05? If they're getting in, how do they do it so quickly? And how do they get such a precise entry? Or why did it stop there? Well, they have to build liquidity first. And what did we talk about before? Equal highs, equal lows prior to the overall level. That's why liquidity is oftentimes built up before these valid levels. So if you're trading with resistance and support, that's why you get stopped out. It's because you're not trading within the real level. You're trading before that level. And then that's why you get swept out of the market. So again, buy side liquidity, we run it, entice buyers, come back down, take their stops, entice sellers below this low. And now we can make the real move, take the seller stops above the high. So now we create the buy to sell to buy, and now that's what creates the entire move. We already knew we were going to go long from 1.05, or we assumed at least. That's what our analysis said. So we were just being patient. We took buyers, took sellers, went long. Buyers, FOMO, the breakout traders, they want to catch this huge move. Nope, we haven't come into the real level. We come short. Oh, now we have created this previous low here, or the swing low. We have broken it. Oh, we got to sell it now. Again, breakout traders, retail, doesn't work. Okay. Now, anyone who was trading in here, and this is again inside supply. This, if they were looking at this from a lower low, lower high standpoint for a lower low, obviously we made a higher high, so we broke the structure, but that would have been a good level to then turn around and buy from because, well, first and foremost, we had a little bit of a reaction from that level. That's our last selling volume. Buying volume. So we had the low, we had the high, and then we made the lower low. So we pulled back into that supply. That is supply. So from a structure standpoint, right? Now, don't even look at what's going on over here. Don't even look at the fact that this is a valid level. Let's just look at this level here. This is a valid supply. Well, okay, it's not valid, but from a market structure standpoint, we should have made a lower low from here. Obviously, we knew that wasn't going to happen, but we should have made one just based upon market structure. But we didn't. We stopped and made a higher high. So you can turn back around and buy it from that level or buy it from lower time frame demand, which is probably more preferred because it's more discounted. So you have this demand in here, right? Low, high, low, high, low, high, failed, higher high, and then we repriced again, made a higher high again. So really just anywhere in this region would have been good for buys. Obviously, we didn't come into it, so there wouldn't have been a trade. But that's probably why we stopped there. We had the inside supply, and at the same time, we created equal lows, swept the equal lows, continued long. So now we're forming higher highs and higher lows. High, low, sweep the lows, go long. Higher high, higher low, sweep the lows, go long. High, low, sweep the lows, go long. That's what we're looking for. Just following the structure and understanding liquidity. So demand in here, we came down, we failed to make the lower low, we made the higher high. We repriced into that prior swing point, that demand, and we went long again, had a lot of imbalance, and now we're looking to come back down into this level of demand in here, sweeping these equal lows, potentially even forming this retail head and shoulders. You can see the shoulder, head, potential shoulder, entice sellers, mitigate this level, sweep liquidity, go long. That's what we're looking to buy. So that's AUD NZD, and that's how you do top-down analysis properly. But it's not always going to be that pretty every time, guys, so don't expect it to be. And if you come across top-down analysis as difficult, or you just don't see any setups, or if you just don't see anything that's popping out at you, it's probably no setup. There's probably nothing there, right? So don't force anything. All right, last pair, and then I'm done. AUD Chef. So remember, we're talking about the whole idea of Aussie dollar, New Zealand dollar weakness. So within AUD Swiss franc, again, sort of similar to XXX yen, right? Because yen and Swiss franc are relatively correlated. We are in a higher time frame downtrend. Well, yeah, we are. Yeah, I mean, that's clear. Low, high, low, high, low, high. If we are to go long, we would go long from this huge sell-off, push-up, reprice continuation, right? We still are overall bearish, but if we are to go long, that would be that level. So 5,980 will be our targets for shorts. Zoom back out. Okay, so we are bearish, higher time frame. So let's see in here. High, lower low, lower high, lower low, kind of getting a pullback, but we're just still maintaining bearish structure, lower time frame. Low, high, low, high, low, high, looking for a lower low. So just the structure, right? So where did we pull back into before seeing this huge sell-off that we saw this past week? Well, you can see clearly in here, we swept all this liquidity. All that liquidity was snagged. Huge push up, huge sell-off so far. So we actually came up and mitigated our previous supply zone. So yes, this is our overall pullback. I was maybe hoping that we would get back up into sort of this region here. We never did. And in fact, when we broke this, we kind of retested the last buying volume, kind of created that little block there, created that supply, and we rolled over. So we came back up, mitigated that level, and saw the strong reaction from it. So now that we've seen the strong reaction, where could price potentially head next? Did we break the counter trend? Well, the counter trend really lies right here, which is why I'll still be keeping this level here just in case we do get, an accumulation and we get a reaction, because we're still bullish here, right? We swept liquidity, sell to buy. Came back down into our last demand zone here. Higher time frame, higher high. Could have a higher low for a higher high, sure. We could go long into this last buying volume here. That's a possibility. So I will extend this out. That is definitely a possibility. So we could come back up into that level before falling. So hedging may not be a bad option here. So I'm just going to get rid of everything first. Clear all this stuff out. Let me give you a precise level here. Let me mark this up very quickly. So the low of that low, let's see the nearest psychological level, 66239. We'll go 6624. Right, the nearest whole figure. I just like to round it off, make it simple. Okay, so we extend that over. So now we could see a higher low for a higher high in here. However, we did come into that supply zone, so we really could roll over to the downside. However, we're still maintaining bullish structure, so we have to be careful. We do, in fact, have retail sell side liquidity. Touch here, touch here, touch here. So that's 1 drive, 2 drives, 3 drives. Retail is buying at this trend line, so that would be really good sell side liquidity to run that trend line liquidity there. So what I'll be looking for is probably both buys and sells. I'm not going to be placing a buy limit here, just because what could happen is price could just go like this and go like that, kind of take liquidity. Maybe I'll look for reactions and lower time frame breaks, right? Something like that. However, I will be looking to place sell limits at these levels. We had a reaction. We failed to make a higher high. We pulled back a little bit. Again, failed again, and lower low. Kind of consolidated again, lower low. So looking to place it off of that, I guess you can call it that daily area of supply. I think it's a little premature. However, we could easily catch a top here. So normally I wouldn't do this, and I don't recommend you do this because you want to see that break of structure first and then some sort of pullback and then short off, right? But we've come into that level. We've swept buy side liquidity. We have reacted very strongly. Aussie dollar is really weak at the moment. So I wouldn't be opposed to even just doing, 0.5%. And if it goes long and we take out that previous high, because we have first entry there, stop loss at our second entry, which that stop loss is at the previous high, then we will look for shorts from this level up here at 66,240, right? Because we still are overall bearish. So those two levels are valid for me at this current time. But really, that's all I have. We'll keep an eye on that level up here if that comes into fruition. I think that previous high sits at, let's see, high 6,750. So that's good. We have swept all this liquidity here. 6,750 is a psychological level. So that previous high, we could easily come up into that level. So I'll just make that pretty. There we go. All right, so that's all I have, guys. If you have any questions for me, be happy to answer that or any of those. If you guys are at all interested in really working with me personally, really taking us to the next level, then by all means, schedule a free call with me. Let me talk to you about how we can best help you. If not, if you like the free content, by all means, you keep hopping onto these live sessions. We're going to be posting some free YouTube videos here in the upcoming days. All righty. If you look at GJ, I'm not going to trade GJ for right now. I looked at it earlier. I don't really see much with it. Do you think people should trade without trading psychology? I guess I'm kind of confused. I mean, you need to have psychology. Psychology is the reason why people lose. It's how you react to what the market's doing. Is you placed ridiculous positions, you over leverage, you revenge trade, and everything like that. So I would definitely, you have to master your psychology within trading. It's a crucial part for sure. Yeah, exactly. It's more important than the system. Anyone can learn how to trade. They always want to sell you a course. I'm not here to sell you anything. Okay. I'm here to offer you an option, right? I'm here to say, if you need additional help, we're here to help you. I'm not by any means forcing anything upon you guys. Why would I actually create a course that I'm giving out for free to my current members? Why wouldn't I just upsell if I really wanted to make that much money that badly? I make money trading. If you think a course will make you a better trader, it won't. Yes, it will. You need education. You need a system. You need a process. You need to understand the ins and outs of it. How does anyone learn? Yes, you can get mentorship from someone that you teach, but I don't have time to sit down with every single one of you and teach you from the ground up. I can't do that. That's why you need to understand it through, course videos that I put on so you can learn at your own pace. Once you have the knowledge, then I can work with you and just develop the skills. Some of you guys just always want to put negativity out there. That's okay. All right. Let's see what else we have. Why are you looking to buy EA and sell GA? Because of the individual setups, right? I treat each trade as its own. It could also act as a hedge as well. I see a sell setup on GA. We have sell side liquidity we need to run. We're in a bearish market. We need to come into that repricing event, higher time frame. But at the same time, we also swept sell side liquidity. We're in a bullish market on EA. So it is not correlated in that sense, but I treat it as each individual trade. So what? I mean, maybe I lose one of them. Maybe EA actually just ends up dying. So I get an entry on GA, but lose on EA. Naturally, with my risk to reward, I'm still going to net profit. It's just the individual trade that I'm looking for, right? Because Euro AUD, it may be Euro strength that's pushing it up, whereas GBP AUD could be GBP weakness. So even though they both have Aussie dollar in it, it's not 100% correlated, guys. How much is the course? Well, currently we don't sell individual courses. It's just the all-inclusive, because that's how people best learn, is getting the all-around help. But I haven't decided on if I'm going to sell that final course by itself. The only way I would do that is if I feel it's necessary, more of like an all-inclusive type of like all-around course to kind of break everything down. But at the same time, guys, I will say this. If I end up making that available to you all, I will say that it will require at least an intermediate level of understanding of smart money. It is going to be more in depth than just the basics. So I would not recommend, if I ended up allowing people to purchase that one, I don't recommend buying it if you're not already having a decent understanding of smart money. You need to have at least an intermediate value or intermediate understanding, not a beginner understanding. Or else it'll just confuse you and it won't help you the best way. What do you think of smart money and Wyckoff combined? Yeah, absolutely. Wyckoff is great. Wyckoff is great to kind of see, offloading, onloading of positions of higher capital within areas of interest that we're looking for. So if we see for instance, a Wyckoff schematic distribution within an area of supply, and then price diverges and volume and price diverge and breaks structure to the downside, well, that's a good indication that we're probably going to continue short. So we look for pullbacks and then short it. It's a good combination for sure. Do I use trailing stops? Sometimes, yeah. I mean, usually what happens is if I'm buying, right, if price goes and hits the previous swing high, then I move stops to break even at least, and then take some partials. And then every single partial profit that I take after that, based upon what I see in the market, then I probably will move stop a little bit. It just depends on the trade itself. Everything looks different. So I do, but there's no like streamlined step-by-step way of doing it. Good question though. All right, what other questions you guys have? I have 3 more minutes until 12 o'clock Eastern. Stay on with you guys. Let's see what else we have. Maybe I missed a couple questions. Can I show you trades that we'll take on Monday? Oh, man. Guys, this is not a signal service, okay? Plus, I don't even know. The market hasn't even opened yet. How do I know what trades I'm going to be taking on Monday? I'm going over the analysis for you. I'm giving you areas of interest. I'm giving you biases. I'm not going to hold your hand. No, I'm not going to do that. Where can we find your information? Oh, sorry, my fault. I have a Telegram. I have a Discord. I have an email. I have a website. Whatever you guys want. I'll just drop a few in here. You can really what's easier if you message me on Telegram. That's just what I use most of all. My VIP services run through Discord. However, I get millions of messages on Discord. So to clear everything up, message me on Telegram. I'll also drop my website in here. You guys can check out what we do, what we offer. I don't have products on the website for purchase because I require a call to be booked before allowing you access to my program, because we only look for very specific people who have the right mindset. I do not allow everyone and anyone to join my program, guys. That's just being straight up, because we did that before and it just created way too much of a headache. People wanting handouts, people wanting to take signals, people complaining and moaning about losing a trade. That's just not what we're about. We have to understand how Forex works, how investing works. And I look for people with specific mindsets. And if you're that, then we like to extend that invitation to join. And if not, then we'll just say, have a good day, and try to give you advice going forward. Let's see. CAD JPY, why the last swing is not structured. So this is a good question, but I'll just quickly show you guys that it's not as simple as just higher highs and higher lows all the time, okay? It's not as simple as just saying, oh, that's a high, that's a low, that's a high, that's a low, that's a high, that's a low.
Most of the time it is, but we have to understand how price is being delivered around these regions. And this is just what it takes to, this is what really just requires experience to understand all this stuff. It's not just as simple as, oh, well, that's the structure point, so I need to be pulling back to short it. Why did this move happen in the first place? Why did this huge buy to sell move happen in the first place? We have to understand that. Now, you can, I mean, sure, you can look to sell it from anywhere in here, fine. But why am I looking for this region of price? Well, at this point, I was not looking for this region when price was right in here. Let's go back in bar replay. I was not looking for, actually, let me just do this. I was definitely not looking for price to come up into here. I was thinking that we may actually stop here and go short. But this is just where adaptations and experience come into the market to say, okay, well, now we're forming a channel. This is a clear channel that we're forming, right? So when you see this type of channel, it's most likely, one second, let's get rid of all this stuff, guys, sorry. We're going to be taking out this high. Why? Because we have to take out buy-side liquidity. So most likely it's gonna run that previous high. Also at the same time, it's just like USD CAD or GBP AUD in the sense that, yeah, sure, this is a high, this is a low. Why did we run that high? Because we have levels that have not been mitigated yet. We have imbalance. We're not in premium price. This is a high, this is a low. This is a overall pullback. This is premium, right? We have stuff that needs to be filled. This is all just liquidity. So when we go to CAD JPY, that's why I say it's not as simple as just looking at the structure all the time. You have to understand what's going on in the entire picture. So yes, that is a structure point, but now at this current time that I'm analyzing the market, based upon what I'm seeing here and what I see over here, we're going to be taking out that previous high. That means most likely we're going to be running probably this liquidity there and all of that there. So at the same time, if we scale into a lower time frame and look at the basic principles of distribution, liquidity, and purges, we will understand that right in here, this is where we broke the low. So this is the overall pullback that failed to generate a higher high. Okay. Now, this is retail resistance or retail trend line, liquidity, right? On a lower time frame, let's just scale into here. On a lower time frame, you can see clearly counter trend, high, low, high, low, high, low, high, low. We failed to make that. We started to push down. We repriced and we continued short. So that was that supply region that we came back up into it really right here. We created 1 touch, 2 touch, 3 touches. So really this, actually, let me just zoom out here. I'm just going to get rid of all this now. Go over here. There we go. So when we swept the liquidity, we made a move to the downside that failed to generate a higher high within this bullish uptrend, right? We stopped, now we started the downtrend. We completely just eradicated this entire move here. In the process, we create a lot of imbalance right there. So we have institutional liquidity being run, well, retail liquidity being run, mitigations of supply within distribution higher time frame that came up into prior supply. We have that repricing here with the imbalance, and we made a lower low. So with that being said and what's going on here, I fully expect price to come higher, at least into that level. It could easily break, but it's going to take out that high most likely. Because just from a liquidity standpoint and a retail standpoint, price is probably not just going to do that. It could do that, but it's probably going to be followed up with that. Because it's going to have to entice retail traders to make a move, breaking out of one way or the other. So that is why, yes, you're right in the sense that that is technically structure, but just through experience, you would probably know that at this current time, we're most likely going to take that high out. So not a bad question at all, but that was just my view on it. Do I use Elliott wave? Nah, I don't. I'm just strictly basing it upon, higher and lower time frame structure, supply and demands, liquidity purges, retail, obviously faking out of retail. I mean, who's to say that you have with the Elliott wave, you have your 0, 1, 2, 3, 4, 5, right? 1 drive, 2 drive, 3 drive, then you pull back, create liquidity, sell to buy again, could have a fourth drive. But well, like, why not? Why couldn't you create the fourth drive if liquidity was created? If you're still in an uptrend or a downtrend, that's just why you read all these books and you go online and look all these things. And Elliott Wave, I mean, I don't really know too much about it, but at the same time, it's probably what a lot of people are using. I mean, I'm not going to discredit it. I don't know enough about it, but I already have a system that works for me. So I really don't need to look at anything else, if that makes sense. Pratt G, appreciate the love. Thank you guys. Thank you guys so much. I appreciate it. Stay tuned for upcoming YouTube videos. I'll be posting some on the Trading Nut YouTube channel. Probably the first one will be released next weekend. And we'll do probably a series of 4 videos. So about a month worth of videos. And then we're going to hop back into the live streams here, because I know you guys like these live streams. At least I hope you do. All right. Any other last minute questions before I head out for the day? It is Saturday. I do want to go enjoy the weekend that I do have. Let's see if I have any other announcements. So what I want to talk about that I'm not allowed to talk about, I will be holding a webinar. I'm not sure when that will be, but I will let you all of you know. I may even create. Shoot. See, this is, yeah, guys, follow me on IG or join my free Discord channel just so I can, give you guys updates as to this type of stuff. I'm just not allowed to talk about it here on these live streams. So it's a really good opportunity that you're not going to want to miss out on. And it's something that we've been putting together for a little while now. We partnered with another company and we're looking to provide a lot of value in the sense of helping you guys make, let's just say, easy money. In that sense, I'll say. So, yeah, I'll put my IG handle here. Go follow me there. I'll post some stuff there. It's at Ariel, so ARIEL __ FX. So it's a double underscore. I'll just type that in here as well. Okay. There we go. Discord, I do have a free channel. I don't post too much in the free channel just because I don't like to give handouts too much, just because if I did, then people would just be dependent on that. And that doesn't create successful traders. But I'll post the Discord here. Let me just find it really fast. Sorry, guys. I just have it posted somewhere. Here we go. All right, I'll post it right here for you all. Join that. Become part of the free channel. I probably will be dropping some information regarding this new opportunity for you all here, and then over the next couple of days or week or so. What's your entry confirmation once market reaches your POI? That's just a very broad question. I'm sorry, I can't really answer that. That's just, it's dependent upon each setup individually. This is why an understanding of my strategy through my YouTube videos or my courses would help. And I'm not telling you to go purchase those. I'm just saying that this is why I can't just explain it in one sentence and have you understand it perfectly 100% of the time. It's just, it requires more in-depth and more in-depth explanation that it requires a lot of examples that I'm sorry, I just don't really have time for. There's many different ways to go about that. And to be quite honest, it's just a little different for every setup. Every setup's different. So sorry, I couldn't really answer that. All right, guys, enjoy the rest of your weekend. I appreciate your time today. Thanks so much. And we will talk to you next month. Take care.